terrible thing for me to say. I'll probably get in trouble for saying it, but I'll say it. I feel like the central banks of the world have been drunk driving with our currencies.
Lugano Plan B podcast presents Bitcoin and Digital Assets from a TradFi point of view with Anthony Scaramucci.
Who are you and how did you fall into the rabbit hole?
You know, I've had this eclectic career. So I grew up on Long Island in a blue-collar family. I went to a public high school. Then I went to a small college in Boston called Tufts University. And then from Tufts, I went to Harvard Law School. And then my first job out of law school was at Goldman Sachs. So you can't get more traditional finance than starting at Goldman Sachs 35 years ago in 1989. And I had a career there for about 7 years. Then I left and started a wealth management platform and eventually turned that into a hedge fund. That business got sold to another New York-based money manager, and I fulfilled my contract there. And then I left, and in 2005, I started Skybridge Capital, the company that I run today, which is going to be 20 years old in March of 2025. And so what is our company? It's a diversified hedge fund platform. We have what's called a fund of funds, where you could give us money and we could allocate to other funds. In addition to that, we have private equity, and we have a diversified coin fund. So it would include things like Bitcoin or Solana or Avalanche. And so how did we morph? I'm a 60-year-old man. I made my first Bitcoin investment at age 56. Most of my peers don't understand the industry. Most of my peers were quite negative on the industry in 2020 when I made my investment, including my peers at BlackRock. You know, the great irony is BlackRock now has the largest Bitcoin ETF, the largest ETF that they've ever created for that matter. They have over $26 billion in Bitcoin, just under 400,000 coins they own in that ETF. But 4 short years ago, they were negative on Bitcoin. Me and my partner, Brett Messing, made our first investment because we were very close to Michael Saylor. We spent a lot of time with him. He explained to us the technical properties around Bitcoin that I, frankly, in the beginning didn't understand. But I'll leave you with this one thought. Anybody that does the homework on Bitcoin, anybody that reads the white paper, meets with people from Tether, meets with people like Michael Saylor or Paul Tudor Jones, anybody that does the actual homework makes an investment in Bitcoin. I have yet to meet somebody in my life who's done the research on Bitcoin that hasn't entered Bitcoin in some way, shape, or form, either small or large amounts of Bitcoin like we have at Skybridge.
Do you think that more Wall Street people would have a similar experience?
So, you know, we, Skybridge Capital, entered the space before there was great regulatory clarity in the United States. And so we actually filed a Bitcoin ETF, a spot or cash ETF in 2021. It was rejected by the SEC. And so we were ahead of people. We started accumulating Bitcoin at 16, 17,000. By November of 2021, it went to 68 or 69,000. And then, of course, it crashed, a result of many factors, but one of which was the FTX debacle. And so we started, again, accumulating Bitcoin 16, 17, 18, 19,000. And so I would say just about every month since October of 2020, we've been in the marketplace buying some Bitcoin for ourselves or for our clients. One other interesting piece of trivia or fact about Skybridge is that when BlackRock started thinking about creating a Bitcoin ETF, they started with a trust. And Skybridge was the first $10 million of outside money in the BlackRock Bitcoin Trust, which got converted into the BlackRock ETF. So we were trying our best to lead our peer group into Bitcoin and get them educated and get them comfortable with Bitcoin.
What does Bitcoin offer to your Wall Street peers?
So, you know, it's interesting in the Western democracies like the European Union, or you take the United States, the great North American large democracies of Canada and the United States, even Mexico, The currencies are generally stable, well, slightly less in Mexico, but certainly in Canada, the United States, the euro, and the British pound. And so this has to do with the system in place. And frankly, there's lots of bells and whistles to decentralize that system and make decisions related to interest rates and things like that very independent from the politicians. What we have found, or at least I have found in the 35 years that I've been on Wall Street, when politicians are linked to the central bank, they have a tendency to corrupt the currency. And so throughout the world, whether many parts of South America, as you're referencing, or parts of Africa, people lose faith in the currency. The currency gets highly inflated. They get paid, let's say, in pesos, or they get paid in rubles, or peseta, you pick it. They get the money, and then the money is less purchasing power by 10%, or less purchasing power by 20%. And so it's almost harder to understand the value of Bitcoin in a country that has more stable currency. You know, in South America, places like Venezuela, you're like, okay, I need a store of value for my work, for my labor, for my energy. I need to transfer it into a different form of energy, something that's hard money and something that I can take with me. It's easily portable. And so for these reasons, Bitcoin adopted, frankly, faster in the non-developed world, or sort of the emerging market economies of the world. And it took a little bit longer in the United States. But I think we're there now. You know, companies like Fidelity, BlackRock, Van Eck, ARK Asset Management, there's probably 13 or 14 large-scale asset managers that have a Bitcoin ETF in the US, and I think that's increasing the adoption. One thing that Wall Street's very good at is selling, and so over 2025 and into 2026, there'll be thousands of Wall Street professionals, either salespeople, financial advisors, or marketing consultants that will be explaining the value of Bitcoin to lots of different types of investors: individual investors, retail investors, high net worth investors, family offices, institutions, endowments, pension funds, things like that. So I imagine over the next 3 to 5 years, there'll be greater adoption. And with that, because of the fixed supply, the very limited supply in Bitcoin, I think the prices are going to go up a lot.
What are the conversations among traditional investors and Wall Street people regarding Bitcoin?
So I would say that when the SEC was rejecting Bitcoin applications, mine included in 2021, there's very high levels of skepticism for people. But then it became clear that because the SEC had approved the Bitcoin futures ETF, there are laws in the United States that basically prohibit the administrator, so that would be the SEC in this case, from being arbitrary or being capricious with the law. So meaning, if you approved a futures ETF, then not approving a cash or spot ETF isn't a logical consistency. It's actually a violation in U.S. administrative law. And so in 2022, when Grayscale, their application was denied, Grayscale decided to bring a lawsuit against the SEC in one of the district courts, and they won the lawsuit. Result of which it paved the way, created an opportunity for people to get their ETFs approved in the US. And so I think two things had to happen. Number one, people like Larry Fink and people at BlackRock had to do the homework that I was describing earlier, get comfortable with Bitcoin. And then number two, they needed outside money. I think they had an investment committee meeting at BlackRock and said, okay, we'll put up our own money, but can you find somebody in the institutional community that would be willing to invest in our Bitcoin product? And so that was Skybridge, actually. So we put up money, and of course BlackRock found other people to do that. And then so contemporaneous with the development of that asset, if you will, that trust, the SEC was losing its lawsuit against Grayscale. And so they were forced to approve the ETFs. And so this is a little ironic, sort of the first time in SEC history where the commissioner was playing politics more than he was observing the law or adhering to the law. And so the great thing about the United States, if you have a situation like that, the courts actually forced him to adhere to the law. So back in January of this past year, January of 2024, I was actually in St. Moritz, Switzerland at the time, that beautiful ski resort not too far from here, when they started trading these cash ETFs or these Bitcoin spot ETFs. And so it's been a huge proliferation of growth in the asset class. Again, BlackRock's the one I know best, over 26 billion US dollars in that and growing. And I would imagine these things will grow into next year. But what I would also say to people is I wouldn't be overly concerned. I mean, there is some people that feel, well, wait a minute, this is a decentralized asset. BlackRock and Fidelity are central authorities. Are they going to absorb too much of the supply of Bitcoin, where Bitcoin becomes concentrated in centralized authorities? And I would tell people, don't worry about that. You know, BlackRock's got $26 billion of Bitcoin on a $1.3 trillion market capitalization, and Bitcoin's likely going up. You know, I could see Bitcoin at least trading to the market capitalization of gold over the next 10 years. And so that implies a 10x plus return from here. BlackRock, I think, will always be a relatively small percentage of the overall size and scale of the asset class known as Bitcoin.
What is the most interesting element of Bitcoin for traditional investors? Why aren't they in Bitcoin now?
So I would say that the most compelling characteristics for me is that when you study the history of money and you say, okay, well, what have human beings over 5,000 years used for money? And so the first thing is, let's define money. It's a technology that we use between each other so that we don't have to barter. And so it could be a small piece of cloth that has green ink on it and Ben Franklin's face. It's technically not worth anything, but it has a 100, the numerals 100 on it, and we say, okay, that's worth $100, and we're able to pass that dollar between each other, that $100 bill, and we're able to exchange goods and services for this piece of technology. And so, you know, we started out perhaps with seashells, or maybe we had wampum in Native America, or eventually gold, because it's a very rare mineral, rare piece of metal, I should say. We started using gold as a store of value. But if you look at the things that we use, they are scarce, they're easy to identify. There's a general acceptance that that will be the store of value among us. And the people that created Bitcoin, whether it was one person, Satoshi Nakamoto, known as Satoshi Nakamoto, or a computer science team, a computer programming team, they checked off all the boxes of what historically people on planet Earth want in their money. It's immutable, it's scarce, it's not replicable. When you transact in it over the blockchain, it's unhackable. So I can take value from my account and put it into your account. We don't need any third party to verify it because we have all of these nodes and we have the system, the Bitcoin network, that's going to verify it for us. And so these properties, when you really understand them, they're amazing. And they will provide us with many, many cost savings and lots of innovation. You know, the globe, the world spends $7 trillion a year on credit card fees, credit card transactions, third-party verification of transfers among parties. And if we start doing more and more of this over the blockchain, it'll be way more efficient and less costly. And so for all of these reasons, I'm super bullish on Bitcoin. But you bring up a good point. Why aren't more people involved? And I think it's a demographic thing. I think it's a generational thing. You know, I can tell you that when the internet became in vogue, I was in my late 20s when the Netscape Explorer was announced and people started surfing the internet. I can tell you my parents wanted nothing to do with it. You know, they are from a different generation. You know, there's many people that are clients of mine that are in their 80s or late 80s If I send them an email, they have their 35-year-old assistant read them the email. So there's a little bit of hardness demographically among people that are older, where they don't like a lot of change. But I just want you to imagine a 20-year-old right now that's super comfortable in the virtual world, super comfortable in the digital world. 10, 20 years from now, they'll be in a position of power, and they'll feel very, very comfortable with Bitcoin. So I'm super excited about the future of Bitcoin.
What's the Little Book of Bitcoin? Who's the reader for that kind of book?
So first say that there's a publisher in the United States by the name of John Wiley, and they publish academic books, they publish trade books, primarily on investing. And about 20 years ago, they did a book that they called The Little Book of Value Investing, or The Little Book That Beats the Market. And Joel Greenblatt from Gotham Capital wrote that book for him. It went on to be a bestseller. And they said, okay, that's a cool idea. Let's write about a little book of gold. Let's write about a little book of index funds. Let's write a little book of hedge funds, which is actually the first little book I wrote. I wrote a book in 2012 called The Little Book of Hedge Funds for this publisher. I just came out with the second edition of that book because it's often used in business schools and universities. And so the publisher came to me and said, listen, we don't have a book on Bitcoin. Would you like to be the author of the Little Book of Bitcoin? And so I called Michael Saylor. I asked him for some help. I wrote a 200-page book, but it's very small. You could read it in a couple of hours. It explains what Bitcoin actually is. It goes into a summary of the paper, a history of digital money, why there were some other products like DigiCash that didn't make it, why Bitcoin was able to scale and reach its escape velocity of where it is today, where's the regulation on Bitcoin, what does the future look like for Bitcoin. And I had Michael Saylor write the introduction for me. And that book is going to be out on December the 5th. And as you would imagine, the cover of that book is orange.
What's the thing that excites you the most about Bitcoin?
Well, I think what excites me in general is, well, it's a little perilous, frankly, what excites me, because unfortunately when I'm looking at the world and I'm looking at our debt-laden society, I mean, you think about governments that are holding a lot of debt, meaning they've asked people of the world, the capital markets, to lend them money to fund their expenses on an annual basis. And so in the case of the U.S. government, it could be anywhere from $1 trillion of borrowings to $2 trillion of borrowings. And so what ends up happening is when you get into a debt-laden society like that, the governments have a tendency to weaken their currency so that they can monetize the debt. They'll pay back the debt with dollars that are worth less than the ones that they borrowed, and that's essentially what inflation is. And so we've seen a lot of inflation post-COVID. It's a little tamer right now. But if you really look at the economics of the welfare state in the West, it's going to put a lot of pressure on these fiat currencies. And so Bitcoin, I think, could eventually develop into a standardized form of global currency in a weird way, because it has no central banking community. You're sort of removing human error from Bitcoin. It's so decentralized that you won't have any one person that could actually tweak Bitcoin or harm it in some way. It's a terrible thing for me to say. I'll probably get in trouble for saying it, but I'll say it. I feel like the central banks of the world have been drunk driving with our currencies. They put too much of it into the system, or they weaken it with interest rates that are artificially low, and it damages lower and middle income people because they make their money off their time and their sweat. You pay them $1,000, but you take a year and have 8% inflation, they only have $920 worth of purchasing power. So Bitcoin, as many people know in Latin America, many people know in Africa, can be a tremendous warehouse, can be a tremendous store of value to protect people from that inclination that sovereign governments have. And so for this reason, I'm super excited.
What are your thoughts about stablecoins?
When you think about a stablecoin, you think about the genius of Tether, you would want to have some type of denomination, electric denomination, if you will, of fiat currencies. And so Lynn Alden, who's a friend of mine, often talks about money never moved at the speed of light. If you had gold bars in a Wells Fargo stagecoach and they had invented the telegraph in 1848, the messages were going at the speed of light, but the money was moving at horse speed. And we've never really had the money move as fast as the information in a society. And I think one of the big innovations that Tether came up with is that they digitized the dollar, and now that dollar can move over the blockchain in a lightning sort of a way. And I think it's been transformative for the world. And it's also allowed for people to stay on the blockchain. So they can invest in Bitcoin, and maybe they want to buy some Solana, or they want to buy something else that's blockchain related. They can move money into Tether, if you will, for a period of time, and then out to other cryptocurrencies on the blockchain. And so this has been an amazing innovation. This has been an amazing piece of technology that Tether came up with that has helped the blockchain community, helped the Bitcoin community, but it's helped the world to grow. You know, at some point, we're going to have a Tether, a unit of US dollar, or perhaps a unit of a British pound, or you pick the currency. It'll be on our phones, and we'll be bypassing the credit card agencies and their 3% fees, or we'll be bypassing our bank in terms of wiring money to each other, and we'll be using this stable coin to transfer value between each other, whether it's at a restaurant or a business transaction, or I'm purchasing a car or a motorcycle. All of this has emanated from the innovations that Tether created 10 years ago.